Well, as we've just seen, another down day on the markets on Friday, and where things are, broadly speaking, starting to slow down in the Nigerian context, we're seeing banking results really keeping things ticking over on that end. What's your view on the sentiment that's currently at play?
Yeah, thank you. Good morning, Alicia. If you start looking at the Nigerian economy, even from the political angle, down to the financial market, I think what we're seeing is just gloom all the way. The recent losses, posted by the banks is actually very, very alarming. We never expected that the rot would be this deep, but having seen losses in excess of 1 trillion naira, we expect that the banking system may actually witness a sort of slowdown in the advancement of credit to the private sector. The investors will also sit back and watch the stock market, especially they're going to stay off the non-financial stocks. We want to see opportunities they want to stay off the financial stocks, and then there may be opportunities in the non-financial stocks. So we would love to see corporate actions from the end of January 2010, especially from the banks, which may just sort of boost confidence if the results were going to be anything to come by. Bank PHB posted probably the largest losses from the banking sector. So it is quite very alarming, and we do not see the stock market experiencing any form of bulls, before the end of the year. The index may actually drop to the 19,000 points.
Well, certainly Bank PHB was the worst performer, shares declining 8 kobo or 4.9% to 1 naira 54, its steepest intraday retreat since November the 11th, and the drop extending the shares fall this year to 85%. So the market not taking too kindly to those numbers. Let's take a look at some of the other results released in this space. And if we look at Intercontinental, I mean, the numbers there looking equally dismal, where gross earnings before making provisions was down 26%. Profit after tax down 1,250%. I mean, a number like that just seems unbelievable at this stage. Market reaction to Intercontinental's figures?
Well, just like the other troubled banks, I think we have about 8 or 9 of them quoted on the floor of the exchange. With the troubled banks, actually, their year-to-date performance have been very, very woeful. On the average, the troubled banks have dropped by more than 75%, on a year-to-date performance. While the entire banking system, the entire banking subsector has dropped by more than 45%. So it's not just limited to either Bank PHB, Intercontinental, it spreads across the entire banking sector. And for these troubled banks, investors would actually want to dump their shares because we've seen their negative shareholders' funds, so terrible. Intercontinental Bank, for example, the net asset is in excess of negative shareholders' funds of about 265 billion, which is quite alarming. It will be recalled that CBN pumped in about 100 billion into Intercontinental Bank. So they have a challenge of recapitalizing to the tune of 25 billion. And they would now have to return back the monies injected into it by the central bank. And we don't know what the regulation will be in 2010, but we see new regulation, pushing down some of these banks, for mergers and acquisition. And at the end of the day, we may end up seeing 15 banks, according to CBN, the way they've been speaking of late. So new regulation in 2010 would actually determine the survival and the existence of some of these troubled banks, most especially. Looking
that there's quite a reliance on the acquisition of these troubled banks to actually affect any kind of turnaround when it comes to these troubled eight. I mean, I was discussing this with the broker on Friday. While many banks are highly rated on African stock markets, analysts here in South Africa have said that this certainly makes them more expensive, considering that there are lots of things to be fixed if acquired. Do you see this as a possible hindrance of any M&A activity moving forward, especially when it comes to foreign players coming in and playing in the banking arena?
Yes, it's a possibility because if anybody of any group of investors wants to like take over any bank right now or probably merge with any bank in Nigeria, they must bring in liquidity. Like I said earlier on, they need to recapitalize first. Now, I do not see Nigerian shareholders, I do not see them having that capacity to recapitalize these banks, right now, and then have the capacity also to return the funds injected into it by CBN, in the short term. So we need foreign funds to come in, which would boost our foreign exchange here, and it's also going to boost the liquidity in the market. So the foreign guys, like CBN have always said, the doors are open, for mergers and acquisition, but the conditions that will be put in place, it's what will really determine the success of these mergers and acquisition. CBN is also concerned that they do not want any of the big four banks in Nigeria right now, like First Bank, Zenith, and UBA. They do not want any of these banks to acquire, or have a single market share of in excess of 20%. So the big banks in Nigeria may not be in the right position to acquire this bank. So that means the door is open for the foreign guys to come in. So I'm sure it would even make more sense for the foreign guys to come in with their foreign exchange, and it would boost our Naira.